If you've locked in a deal, if you're buying a car like a Rivian, if you've locked in, you're still going to be eligible for that. For people that are brand new to the market, there are a lot of new hurdles for them to jump, are they not?
Not just the people, but the companies, which is why we've really received kind of a mixed review of the tax bill. You've got a $7,500 credit, but maybe 70% of the vehicles on sale today won't actually qualify for it. And then if you look down the road a year or two, possibly none of the vehicles will actually qualify for it because of the reliance on China and kind of where these minerals are coming up from for the batteries. So overall, the automakers have been very hesitant to actually support this until it actually got passed by the House. And then they're like, okay, we have to deal with this now. Let's try to figure out what we need to do and what would be the best plan of action to actually get these credits for our customers.
Listen, I love this country, Mike. I've made no shame of that. I like manufacturing here in America. I think there's an opportunity for renewables and electric cars to produce a bunch of jobs, particularly in hopefully Detroit where you are or the South. But the reality right now is with the EV side, there's a lot of popular cars that are not made here because they don't have the supply chains, correct?
Yeah, Brian, if they are made here, they cost over the threshold for the vehicles that are going to be included in this Inflation Reduction Act. So if you're looking at a Tesla, if you're looking at a Rivian, like you mentioned, if you're looking at a Lucid or any of these new vehicles, they are not going to qualify because they just cost too much. Even versions of the F-150 Lightning, which we're seeing right now, which was the first mass-produced electric pickup, probably will not be qualified for most of the models because of the price hike.
Unbelievable.
And the automakers and the Chevy Bolt probably will be, but once the minerals kind of go into effect, we'll see if that even qualifies at $25,000. And let's put this into context too. Right now, in the second quarter, about 6% of the market were pure electric vehicles. So we're not going to talk about vehicle sales plummeting for EVs. It's a growth market. But what we are talking about is maybe a slowing or reduction over the mid to short term regarding what people can afford and what will qualify.
I know people aren't going to feel sorry for anybody that can afford a $90,000 F-150 Lightning, Mike. But the reality is this, when you read in Car and Driver magazine and hearing that, oh, you get 100 miles towing a trailer on a charge, you got to take the trailer off to recharge it. Oh, and I'm not getting the 7,500. Oh, and they just raised prices. I mean, these are major hits to a market everybody says must grow. I know people that have changed their mind on cars because, like, it's getting 100 miles on a charge when I'm towing my boat. No thanks.
Yeah, I mean, Brian, even the Biden administration has the goal of 50% EVs by 2030. When that came out last year, that was a very optimistic kind of sales target. When you talk to executives privately or even some of the trade groups were saying maybe 40, maybe. But even a survey of executives had it from anywhere from 20% to 65%.
Yeah.
So this is still a very young industry. And this kind of reduction in the tax credit, many people see it lowering kind of the outlook for the EVs.